Hi there, I'm Rose Jacobs here with you for Kalkine Media. Today we're going to look at the tough climate transition path and should you hold the following FTSE 100 oil stocks. First, make sure you press the bell icon for all the latest updates right here on Kalkine Media. A coalition of 10 investor groups has laid out a climate transition pathway for big oil, including majors such as Royal Dutch Shell, BP, France's Total and others, in a net zero standard for the oil and gas report published today. Global oil giants are facing a tough road ahead to tackle the climate emergency. Thus, the investor group, Institutional Investors Group on Climate Change, or IIGC, set out a blueprint of about 10 standards in corporate reporting and achieving investor requirements to help investors compare energy companies' decarbonisation strategies. The coalition of investors have a combined total of US $10.4 trillion in assets under management, or AUM. The unprecedented reporting standard was arrived at following several high-level discussions between investors and global oil giants. Spanish oil and petrochemicals giant Repsol, BP, Shell and Total will form the core member group to tackle the path towards achieving net zero carbon emissions by the year 2050. Institutional investors, private equity firms, banks and other money managers have increasingly faced pressure to ensure their investments align with the Paris Agreement signed in 2015 to limit global heating to 1.5 degrees Celsius from pre-industrial levels. While Shell, BP and others have already announced their climate transition plans, they have not been as aggressive and targeted as having a uniform set of standards in the net zero standard for oil and gas. Let us look at the number 2 FTSE 100 oil and gas stocks and see how they reacted to the development. Number 1, Royal Dutch Shell plc. Royal Dutch Shell is an oil and gas major and also part of the core group of oil majors working with the new IIGC on the standards. The company declared its Q2 2021 dividend payments recently of Euro 0.2024 per share for A shareholders, and it will be paid out in euros. B-class shareholders were paid out earlier this month in pounds sterling at 17.38 pence per share. Shell's market cap standards at around £59,467.97 million, and BP is another UK-based oil and gas company reporting interim dividends of US 0.0546 per share today. And this will be payable in pounds sterling on the 24th of September. The dividends will have an exchange rate of £1 equal to US $1.38126. BP was the highest riser on the FTSE 100 despite the news. BP's market cap stands at around £60,233.58 million. So, you're wondering, what is the bottom line? Despite making net zero goals, most oil majors have been lagging in their efforts in their move towards decarbonisation. This report will bring in a much-needed standardised method of tracking a company's UN-backed climate transition efforts and ultimately help climate-conscious investment to flow into the sector. This will also force oil companies that have yet not made aggressive climate targets to adhere to the new standards. And that's it for today. If you like what you've learned, then don't forget to like, share, comment and subscribe, and go to kalkinemedia.com for all our latest. I'm Rose Jacobs and I'll see you next time.